Kia ora, I'm David Chaston with 90 at 9, brought to you by interest.co.nz. This we get everything you need to know in 90 seconds at 9 o'clock. With news, China seems to be shaking off its pandemic handbrake faster than many expected. China said both its factory sector and its services sector each expanded at a moderate pace in February, a key set of improvements. Both were outcomes better than expected. Their services sector result was a 2-year high. The factory sector result was a 10-year high. And backing that up was the private Caixin PMI survey, which reported similar good improvements. Meanwhile, there are some indications that local incentives are in fact luring more buyers back into the Chinese housing markets. Those much better Chinese PMI results mean that globally, the factory sector returned to an expansion mode. Output rose for the first time in 7 months amid improving supply chains and China's reopening. Business optimism also revived, rising to its highest level in a year. This expansion in mood is being led by India, China and Southeast Asia. Now Europe, Japan and the US are the laggards. And the hoped-for turnaround in the American mortgage market has been a mirage. After a brief revival in application activity in January when mortgage rates dropped to 6.2%, there has now been 3 straight weeks of declines in applications as mortgage rates have jumped 50 basis points over the past month. And the American ISM manufacturing PMI pointed to a 4th consecutive month of falling factory activity, with companies continuing to slow outputs to better match demand for the first half of 2023. The price pressures within the American PMI data has markets raising their expectations on where the US Fed will have to go with its policy interest rates. Now, bond market pricing indicates a 5.5% Fed rate by September from its current 4.5%. The next review is on March 23 in New Zealand time and is expected to raise it to 4.75% then. And German inflation isn't moderating. It came in at 8.7% in February, not far from the peak of 8.8% seen in October and November. This data is sure to steal the ECB for more rate hikes there. And the US Treasury 10-year yield starts today at 3.99% and up 6 basis points. And the price of gold will open today at $1,841 an ounce. It's up $13 since yesterday and building on yesterday's move up. And oil prices start today down 50 US cents at just under $77 a barrel in the US, while the international Brent price is just under $83.50 a barrel. And the Kiwi dollar is up another 0.5 cent, just under 62.6 US cents. Against the Aussie, we're up 0.75 cent at 92.5 Australian cents and a 6-week high. Against the euro, we're firmish at 58.6 euro cents. That all means our trade weighted index is now up to 70.8 and up 50 basis points on the day. Get more news affecting the economy in New Zealand from interest.co.nz. Kia ora, I'm David Chaston. That was 90 at 9, brought to you by interest.co.nz.